This week, our forbearances, the next reverse mortgage marketing windfall.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome to the Industry Leader Update. Perhaps William R. Emmons, an economist with the Federal Reserve of St. Louis, said it best. We have no idea what the true state of the housing market is or would be hypothetically, because we've hit it with such a huge dose of morphine. The morphine being mortgage forbearances. Today, over 2.6 million Americans are in some form of a forbearance plan. And most certainly among them are tens of thousands of homeowners who have reached the age to be eligible for a private or federally insured reverse mortgage loan. The question homeowners may want to ignore today, despite repeated extensions which allow them to pause payments or avoid eviction, is a day of reckoning is certainly coming. Forbearance plans allow a borrower to reduce or pause their payments, while a foreclosure moratorium, that stops any pending foreclosure actions and subsequent evictions. Now, to date, there have been 5 extensions of foreclosure and evictions, but only 1 extension of the forbearance period for loans that are federally guaranteed. Now, prior to being sworn into office, President Biden called on Congress to extend moratoriums and forbearances through September of 2021. We could conceivably see foreclosure mitigation measures in place as long as 2 years after the COVID-19 pandemic hit our shores. So don't be surprised if you see more extensions even into next year, should the tangled nest of delinquent mortgages become too politically or economically toxic to unwind. Now on to the business of senior mortgage holders who find themselves in a forbearance plan. In the last year on this show, many times I've called a reverse mortgage the ultimate forbearance plan. But the question for you, our viewers, is how would you market to an older homeowner in your region who are currently in forbearance, but they're uncertain as how they're going to resume their payments in the future? That particular question is going to require 2 things. 1, your creativity, and 2nd, coordination with your lender's compliance department. And if you do decide to reach out to that unique market, here are some considerations to keep in mind. 1 is that retired homeowners are typically on a fixed retirement income, and thus they have not seen a reduction in monthly cash flow that would challenge their ability to stay current on their mortgage. And if their income reduction is permanent, then they have to ask, how long can I continue to afford this home? Now, naturally, it would be the working seniors that may be especially hard hit by the pandemic, and they're most likely to apply for a forbearance. Next, do those that have a low to moderate mortgage balance today really want to recast that loan into a 15 or 30-year term should the lender offer such an option? Or would they instead prefer to eliminate any required monthly payments, at least for principal and interest, and then accept the deferred but growing loan balance? Another consideration, is there a reduction of income? Is it permanent or temporary? The last thing one wants to do is to use a long-term solution for a short-term problem. Then there's the existing assets. Do they have access to other accounts that they can tap into to meet their cash flow needs once the forbearance period ends? And would those withdrawals entail significant penalties or tax consequences? The more we consider the complexities an older homeowner in forbearance faces, the wiser it seems to enlist the assistance of a financial professional. Either way, forbearances will end, and eventually, now is the time for the older homeowner to make their exit plan today, instead of facing a financial crisis in the future that could lead them to ultimately losing their home. So now is the time for your feedback. Have you considered reaching out to older homeowners who are in forbearance? And if so, have you found a successful and compliant way to do so? Are you addressing forbearances with your existing network of financial advisors? Let us know your thoughts. You can do that in the comment section below. And before you leave this video, be sure to thank our sponsor, that's Fairway Independent Mortgage, by clicking on their banner right above this video frame. That's it for this week's show, but don't forget, every Monday we release the latest episode of our podcast, HECM World Weekly, which has been running strong for over 10 years. Have a great week.